Hello and welcome to another MCO update on gold. We're going to talk a little bit about the gold chart. It's still in this sideways consolidation phase. I mean, I don't know what's going on here. We simply stay in this range here over and over again. For days now, we've been in this sideways range, right? So that's a bit of a problem because we cannot clearly say or confirm yet that the C wave down has started. It might very well be that we form a wider B wave. That's still a possibility. Talked about that yesterday already. But overall, as you know, we're simply staying in a range at the moment. So I specifically added this red dashed line, down here already a few days ago to indicate what our downside breakout point is. And that line is defined at $3,271. We haven't broken that. No, rather the market is forming a higher low or has formed a higher low. That is still in line with the idea of an Elliott wave triangle. Let me explain. If we assume a third wave topped here on the 22nd of April, this was an A wave down, then it is important that in a triangle, at least in the traditional sense of a triangle, we're forming a series of higher lows and lower highs. And a triangle from an Elliott wave point of view is typically a 5-wave move. A, B, C, D, E. So that E wave could form a top quite soon, and the market could make another attempt to break down. That would be the white scenario. But this is only valid as long as the market stays below the C wave high. So this is the space, this is the room the E wave still has. It could technically still stretch a little bit higher before going down, but we have an upside breakout point, which is the C wave high. I haven't shown it here, but I mentioned it yesterday. This would kind of be the upside breakout point. It would be at least the invalidation point of the triangle. So there you have the range, right? It's quite simple. That means the upper, let's call it the upper breakout point here, breakup point, is the 3,363 level. Why is that relevant? Well, it is because, it's relevant because if we break above that level, then I can't call the B wave the triangle. It could still be a B wave, so the context would stay completely unchanged, unaltered. So the context would still mean, hey, we have an A wave down, this is a B wave, but the B wave is not a triangle. The B wave is, let's call it a flat correction, where we have an A wave, a B wave, and a C wave. So, like that. Or maybe even that internal B wave is a triangle. I mean, this is where it's getting super complex then. So it often doesn't make sense to try to predict or forecast every single adjustment when we're dealing with a sideways range and when we're dealing with back-to-back corrective price action. I mean, that we are in a correction, that should be clear. That was already clear a few days ago. We seem to be caught in this sideways consolidation, and a break to the downside, especially a decisive break below 3,271, would confirm further that wave C to the downside has started. But any break above the green line at 3,363 would suggest that we are moving higher to basically work on wave C of B in the yellow scenario. Then I would shift the focus to the blue zone, which would be the ideal target zone for yellow wave C of B. And it is defined between 3,380 and 3,447. So unfortunately, there isn't really too much new stuff to talk about. The overall context is unchanged. We just have seen some sideways consolidation, and have to be a bit more patient, but we should get close to, well, we should soon complete this triangle. I mean, the structure is quite clear, okay, and the levels as well. The only question is, because a triangle is a pattern of indecision, is this an internal triangle in the yellow B wave, and we rally higher in wave C of a larger B wave, or is the entire main B wave the triangle? I mean, difficult to say, right? Very balanced probabilities, but the base case is that we have started this fourth wave. So as long as it's following that roadmap here, we can, the pressure is downward. Should we rally into the upper resistance there, then we have to pay close attention to the microstructure. If we don't see any weakness there, then I would have to adjust my scenario. But until then, one of the two variations of the same scenario essentially should play out, or at least these are the ones that I'm watching. Nothing is set in stone in the markets, as you know, but so far the count is, you could say it's playing out, but not much happened, right? It's just moving sideways, which means actually there is not really any progress in the chart because we're not moving in line with any trend at the moment. So yeah, that's the update on gold. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, if you're interested in additional updates about gold and silver, check out our stocks membership. Yeah, you find the link in the description. It is, it covers the S&P 500 daily video update. NASDAQ is included and many stocks. And we now also cover gold and silver as additional short-term written updates in there together with the live charts. So you always know what's going on there. Thank you very much. Bye-bye.